Hello, and welcome to new update from the Markets Middleman. Today is Monday, July 27, and I'm about to update you guys on what happened ever since the last update. This is the last week of July, and there's going to be some heavy news, which is the Fed interest rate and the GDP, and some heavy news on the EU as well. So all of this is following a major external change of character that I explained in the last update. So this is a continuation of the first update. So if you haven't watched the first one, please pause this one, watch the last video, and then hop on this update. So the main idea was that overall the bias on the DXY is bullish, especially after closing on hourly and daily closing basis above this buy side over here, marking a bullish change of character. Now, overall, just a quick note that I'm overall still very bullish on the DXY, at least first target to hit this monthly imbalance over here, which is a buy side on the daily, and overall within this uptrend over here, I think that the DXY will push even higher into the weekly order block plus this gap open over here within the upcoming few weeks. With that being said, there's really nothing to add more than the last update. This is the obvious change of character that we saw on the 4-hour time frame, and I wanted price to retrace anywhere at or below the 50% feeble level, which it did. Made the reaction. I took a trade on EU, which I will outline in very few moments, but it turned out to be a break even, and today was another trade short on EU, which I will mention right now with a continuation idea for today slash tomorrow. So overall, really nothing changed from the XY. Maybe we will see the first push higher and market would consolidate for a couple of days until the Fed interest rate comes. But we cannot also count on this because usually the markets start pricing in the Fed interest rate before the actual news comes. So by the time the news comes, it's actually a reversal. So we will see what price is going to show us. But I believe with this gap lower, Monday could potentially be the low of the week. And we will just find out that price is going to continue to the upside. Small note that we haven't seen any serious push in July yet. So after June 24 was the high, market entered a consolidation for a full month. So will this last week of this month be the continuation to the upside? Because usually when price consolidate that long, the breakout to the upside is actually strong. So if we take a small, simple measurement from the low, okay, this is very conservatively, price takes us almost into the mid-range between the last buy side and the weekly OB. But anything could change at any time. So price could take this buy side plus tap into the monthly fair value gap and then rotate higher, keeping in mind this daily imbalance that wasn't mitigated since the last Fed interest rate on Wednesday, June 17. So staying open for all possibilities. That's why the most simple narrative for now is just for price to reach the buy side and this weekly high. After that, if we see another continuation or a break of structure to the upside, then we will wait for the exact same thing, anticipating a continuation and the trend. With that being said, on the DXY, as usual, it makes my job easier to identify setups on the rest of the assets. Okay, so this is why I asked you to watch the first update because I don't want to repeat the same story and I want to invest my time in the continuation method. But here's the setup that I took last week from this H4 bearish breaker. So I placed a trade over here and my take profit was at the sell side. I honestly had the intention to leave this a little bit open in case we saw a continuation because this is a trend continuation trade. So more likely in continuation, price tend to move beyond the low or the high. Unlike reversals, when you are reversing price from a high to very significant low, that's it, done. But in continuation, you expect price, when you short, you expect price to go beyond the last low. And since we are overall bearish and I have the sell side in mind, so I'm going to be open for price in case I'm going to see a break or a run on through those lows over here. But the short I took was on Friday. I placed my trade somewhere around this level over here after a very lower time frame confirmation. I protected my stop loss within this candle over here. And after this displacement to the downside, my stop loss became at break even. And I stayed in the trade. It needed a little bit of time to sweep the sell side. But just before sweeping the sell side, price rotated higher, market closed. Within this gap open, I was out at break even. But what happened today is the following. I'm just gonna jump into the 2-hour time frame to identify the area of interest. So this is the last change of character that happened over here. So, and this was the last break of structure to the downside. Okay, within this last leg to the downside, there was this 2-hour bearish fair value gap within a bullish. So this is a 2-hour BPR, a very nice imbalance. So what price did is the following. During Asia, price approached this area of interest and then made a small retracement lower. During London, price went up, swept this buy side over here and made a change of character on the lower time frame. So if I go to a 15 minutes time frame, this is what I was waiting for today. This was the last low created. This was Asia high. During London, price swept Asia high and made a change of character on the lower time frame. So I had my sell limit order waiting around this level, 1401, my stop loss above this high, and I'm targeting the sell side from last week's low. It's around 2.3 hours. I'm gonna see how price reacts into this sell side. If I see a very sharp push to the downside, I'm gonna stay in the trade. But if I see price comes down with no momentum, change the market structure to the upside, then I'm gonna close this trade for 2.5 or 2.3 or somewhere around that. Now, what's happening on the 1 hour time frame? Right now, if you entered already from this level over here, I don't want to see the high of this candle be taken anymore. Okay? Otherwise, price would have a different plans. But I think why this high specifically? Because this was the first push to the downside, okay, on the lower time frame, and then it created another push. So I don't want to protect my order within this high. It's a little bit risky. Maybe we will see some violation during New York, but the setup will still be valid. But my stop loss trail at this high is fair enough. Okay. Now, as a continuation for this idea, right now I see price also closed below the weekly open gap. Okay, and this gap is yet to be filled within this sell side over here. So right now, 2.5 minutes, price will create this bearish fair value gap, and at the same time we have this 1 hour inverse over here that was displaced lower and never got the chance to be retraced back in. So what do we have around this level? We have a bearish fair value gap. Usually it could be balanced, all of it, maybe a small tap into the inverse, but the whole structure will still be valid, and then we will find a continuation to the downside. If you are watching this video and you think of joining sellers, take very nice confirmation over here. Okay, don't just jump blindly and try to protect your stop loss above this high. And you can then target the weekly gap or the sell side over here. You'll still have around 2 or let's say the average entries over here, stop loss here, take profit. You will still have margin of 2 to target to the downside. And if you are not looking to short any time today, you can simply wait for a full break of structure to the downside. Then we will have this as last displacement lower. We will wait for a 50% retrace, maybe a Fibo, 50% Fibo level aligning with this breaker and a fair value gap. And then a retracement higher. Again, we're doing the same exact thing all the way until this sell side over here. So this is also like most of the usual scenarios that could happen. And of course, anything can change. If I see price closing back above this inverse fair value gap, I think I can close my position on either break even or a small loss because I think this structure would have failed. Because if price wants to stay bearish, right now it already created this 1 hour bearish fair value gap, so I don't want to see price inverting it right now. So this is all in all for the EU. I'm either gonna add on my positions from this level over here or just simply wait until the full sell side is taken, and then I will see if I have a break of structure to the downside. Maybe during the news we will have a correction to the upside into this breaker and then a continuation into the sell side. EU still have um, like a huge target to the downside, which I pointed from the higher time frame. So I think that's it for EU. Pretty simple and straightforward. So regarding GU, again, the last update explains why this level was very important on GU, the 4-hour fair value gap. Price extended a little bit and touched this 4-hour breaker on a closing basis and also swept the previous candle's high and delivered into its low. And so far we saw the close already of the H4 candle inverting this weekly gap open, leaving behind a fair value gap. So there's nothing much to add here. Price is too weak to even sweep this or balance this daily fair value gap. But at any point, if I see a major correction to the upside, something like this out of nowhere, just tapping into this level, this is still very bearish. Okay, even though short term it makes a hourly change of character, but the overall trend is still bearish, and we just made a fresh change of character that I spoke about in the last update. So there's really two ways to play this. Either wait for a further correction, but I think it's too late with how the DXY and EU is going. The other way you can work with it is wait for a full displacement to the downside. There's really nothing here to be afraid of in terms of going bullish because there's no bullish fair value gap, there's no proper breaker. We're coming after sweeping May's high, okay? After we confirmed that this is no longer a change of character to the upside and bullish, and in fact, price made a bearish change of character. So really, this could be very logical for GU to keep on pushing down, just retracing back into a breaker and just continuing the trend to the downside. When GU trend, when it chops, okay, it chops. Okay, we're talking about such price action, no clear levels, maybe a little bit tough situation. But when it trends, it really trends very well. So uh, there might not be a lot of differences between this setup over here tapping into the breaker and this potential setup that will happen over here. Okay, just if you stay patient enough to wait for the proper structure, I think we will have a very nice structure from GU. But I'm just preferring to trade the EU since it simply provided me an entry. Moving forward for AUD, also, again, from last update, I wanted price to tap into this 4-hour order block. I don't see a change of character yet from this low over here. I saw an internal change of character, but I'm trying to front run the full change of character because of the rest of the USD pairs. So I have DXY confirmed bullish, I have EU GU confirmed bearish. So usually AUD is a lagging indicator for the rest of the assets. So if price wants to go up and AUD is stronger than those currencies, especially EU and GU, then you find out that EU made the move already and EU and GU is just lagging behind and they are about to cover this correlation gap between them. So here, I think this is the same exact thing happening. I've seen this a lot of times from the AUD. This is why I'm interested to trade it right now, unlike before. So I set this 4-hour order block and I did take a trade. Okay, last week I took a trade that ended up with break even. So this is the 4-hour order block. Price tested this level and inverted this bullish fair value gap on the 1-hour time frame immediately. So I've set my short limit, my short order from here. I protected my stop loss around this high, and I wanted to target this sell side in an anticipation for a full change of character, targeting this sell side as a swing trade. I was willing to really hold this trade, but after price dipped lower, I took my stop loss from here into break even. Why? Because I thought that this candle's high should be protected. It created another bearish fair value gap and it should not be inverted in case price wanted to continue lower. And I'm glad I did this because there was really no good reason for price to rotate higher other than it's just Friday and there's still more imbalances to cover. So I went out at break even and today during market open price gapped higher, made a high, then swept this high over here, taps into the 1-hour fair value gap, the only fair value gap within this leg that confirmed a break of structure, at least internal break of structure after an internal change of character. So as you can see, there's still everything here is still internal. Okay, that's correct. But sometimes you take a confirmation from the internal range, anticipating a full breakdown of the external range. So this is what's happening with AUD, and especially that it aligns with the overall bias on the rest of the USD pairs. So if you want to get closer a little bit, there was two ways to enter this trade. First, after this 1-hour displacing below this order block. Second is after this 1-hour inverting this 1-hour fair value gap. And the third way to enter this market is the following. After a 15 minutes change of character. So that's still not happened yet. So this was the last low created after a new high made a break of structure. So if we close below this low over here on the 15 minutes time frame, any retracement higher into this level over here is a sell opportunity. Okay, so you can take a sell position over here. If you want to be very aggressive, you can protect your stop loss over here. If you want to be conservative because you have enough target to the downside, you can place your stop loss around this high and target the last week's low over here. This would give you 2.5 or around 2.5 or trade. So it's really up to you how you want to trade this level over here. Maybe a full displacement to the downside. This becomes a 30 minutes order block that you can place your sell limit at and target the sell side. Really nice structure. Okay, I believe there's a significant push to the downside or significant target to the downside. Notice the similarities between what happened over here, an internal change of character, retracement, and then a full blow onto the downside. Internal change of character, expecting the same exact thing to happen because nothing really changed within this retrace to the upside. So there's really huge and nice potential to the downside, at least to take out those two relative equal lows by the time we see where the DXY and his move. So with that being said on AUD, I will move forward with gold. So moving on to gold. I'll be honest, gold is the least favorite asset right now among the other structure. And it's simply because when there is a sell side and a buy side and just price ranging between them, okay, I don't have the highest edge in the market. Okay, because like, okay, this is an internal buy side sweep, this is an internal change of character, like nothing is really happening on an external level. Yes, I have set this 4-hour bearish fair value gap, which was tapped during today, okay, and more visible on the 2-hour time frame. This was the bearish fair value gap and 61 Fibo level from this push to the downside. But it's really like there's no proper sweep and an internal change of character, etc. So I'm gonna really keep gold aside. But I'm just sharing it to simply tell you that I have not an actual setup on gold specifically, but it's not bullish yet. Like there's no signs of bullishness. Like if I'm not able to give you a very precise and critical sell setup, at least I'm gonna advise you to avoid buying gold because there's really no bullish bias. There's really no bullish change of character. There's nothing that hints out for bullish gold. So just avoid buying gold in case you are, unless you see something closing above this protected low. Let's call it protected high, not a low. But other than that, I mean, there's really nothing for gold to see. At least, I need a break of structure to the downside, okay, or a full close below this range, okay. After a full close below this range over here, then I'll be interested to trade gold to the downside. So there's nothing really specific about gold. What caught my attention today, and actually one of the community members shared a setup on oil. So I went on oil and I saw something really interesting that happened within the last few weeks. So after the war and all of the volatility that kicked in oil markets, price retraced the pre-war levels. So it covered all of the daily imbalances, all of the weekly and the monthly imbalances. And what happened after that is something very interesting. We've seen how this week swept this weekly low, refused to close below, and then we've had 3 weeks of displacement higher, inverting all of the weekly bearish fair value gaps and leaving a bullish fair value gap over here. So there's a very, very interesting inefficiency on the weekly time frame. If I scale down to the daily, what does this inefficiency represent? It represents the daily order block over here, or probably 3 days of consolidation. So it's the only down closing candle within this upward move. And here I'm using the FXCM charts because I think they are more accurate than the other brokers, especially on oil. So the hourly change of character already happened. I'll just go into the 4-hour time frame real quick to show you the change of character that happened. So this was the last high market created before it made a new bearish break of structure. So after this close over here, it marked the first ever change of character within this downtrend. Okay, this marked the first initial push higher for oil. Okay, then price retraced back into a daily breaker, then again, swept this internal sell side, made another displacement, and continued its push to the upside. So notice what happened over here. We have a weekly fair value gap, we have a daily order block, and one last thing interesting, I always tell you the area of interest should be at or below the 50% Fibo level. Look where the 50% is. So I have the 50% Fibo level. I'm buying from a discount. I have the weekly fair value gap inefficiency, huge higher time frame inefficiency, and I have a daily order block representing 4 days of consolidation. So this is really a very high potential area of interest. Now here's the thing. Notice this gap lower, okay, on the 4-hour time frame. Unless I see price pushed into it with no bearish reaction and then made a new break of structure bullish, okay, I might give the exception for price that it's going to continue higher without reaching the weekly fair value gap. But what I think usually happens is need some patience. We'll trap in some buyers, fill out this imbalance on the 4-hour time frame. Maybe from now until Tuesday, Wednesday, we will find out whether price would keep on correcting to the downside until it taps into the weekly fair value gap. I'm gonna place first entry over here and try to protect my stop loss within below those lows over here, okay? And then any internal change of character close above a previous low, I'm gonna place another orders, and then my stop loss would be below this low over here. For the targets, I have a very obvious target. First, previous weekly high, as well as the high from June 3, so the high of June. In July, price took the low of June. So this was the low of June. July take already took the low of June and probably will be going higher into the high of June. So this is really very interesting setup. Shout out to the community to pay attention to such critical opportunities because I was out of trading oil for a long time. but I thought that this opportunity is definitely worth sharing. So keep your alerts on this level over here on oil around, let's say, $80.5. So with that being said, I hope you enjoyed today's update. It's the last week of July again, and I think this week a lot of interesting setups will emerge, especially when it comes to the change of character that happened from the last week. Probably it's the signal that a big potential breakout is about to happen, especially that we have enough fuel for it when it comes to the Fed interest rate and all of that. So let me know in the comments if you want me to cover any market or your opinion about the update or anything that you want me to discuss in future updates. Thank you so much if you made it that far. I really appreciate each and every one hopping on this channel. I have a lot of plans that hopefully soon we will announce them one by one. So yeah, again, thank you so much, and I see you in the next update. Cheers.